Welcome back to Crypto Rosetta. Joe here. Thank you all for tuning in. It is great to have you all here. We are going to take a look at a whole host of charts today, really key ones, things that I really think are important to keep an eye on. I've got some, opinions that I want to share with you. Also, if you've got opinions on anything in the market, make sure you leave a comment below. Always look forward to hearing different opinions and getting back to you. If you're new here for the first time, hit that subscribe button, tap the bell, select all notifications, go back and watch previous videos. We've got a whole host of crypto content coming out daily. And guys, if you enjoy this content, make sure you take a second to smash up that like now, helps it get out to everyone. Now let's hit these charts, starting off on Bitcoin. Okay, for anyone who's new here, I appreciate not a lot has changed in the last couple of days, but this is my plan for Bitcoin still until invalidated. I still think there is a bearish scenario potentially playing out here. We've had the support and trend line that was broken. Its potential Wyckoff distribution, which was 3 drives to the high. Once that trend line's broken, we come back up for a retest. That retest being higher in the price action. Now, a lot of people will be thinking higher in the price action. Surely it's bullish. How can this still be bearish in this case? Well, if you look at the chart, guys, as time moves on, it was previous ascending support. To retest that line, you've got to go higher. So that's why I think, the retest on it, yes, it's higher in the price action, gets everybody super bullish, but actually it's a potential bull trap, retest trap, if you like. So I think we are going to come back down to 31K in a bullish or bearish scenario, retest there, and either get back up, break back above the line, distributions invalidated, and bull markets on, or we get rejected, come back down to 31K, we'll get a bounce. It won't go to as high as we, rejected from here, and then we'll break down. And that tends to be what happens if this distribution schematic plays out. So time will tell. It's going to be really key weeks coming up. Now, looking at the shorter time frame on the 4 hour here, got a few potential scenarios which I think can play out. Either way, we're still heading to the same targets. So we could either, get a little move up here, right? Just retest the line one more time, which would come in around about 36,200. I appreciate there's already been some wicks up there on some exchanges, but this is just having a look at Binance Spot as data source at the moment. So either get to 36,200, another rejection off the line, don't get into the distribution invalidation range, and break down from there and come for this 31K retest. We could also just go sideways for a couple of days and come down, or we could just go straight down. But either way, guys, whatever happens, I'm very confident that we are going to see 31K retested at some stage. Then what I think will happen is it'll actually be a rejection off the line. We'll get a bounce. People thinking we're going back up. It was just a back test of 31K. Everything's fine. Everything's still bullish. And then we're going to roll over. It's going to become a lower high. And then things are going to, start to deteriorate from there. Bull's last case scenario will be if we break down to 25K, they'll think, okay, we can still bounce from here. And what they won't realize is we'll continue to set lower highs. That is what I think is going to play out. Now, you can also see on the RSI at the minute, resetting a bit. It was previous bearish divergence on the RSI, and it still is on the high time frames. However, a little bit of bullish divergence on the RSI at the minute on the lower time frames. So that's why I'm thinking there's a potential shot of getting this one more slingshot up to 36,200. I think again that'd be a decent move if it plays out from the exchanges because it'll help liquidate early shorts. A lot of people probably got stop losses in around 36K. And also, it could bring just a few more people, a bit more retail back to the market, thinking, oh my God, it's another high, right? I've definitely got to get in now. And then they literally buy the top. So that could be what plays out here. Now, looking back at the charts now, I want to move on to crypto total market cap. I think this is a really interesting chart at this stage of the cycle to look at. So you can see our lows back in November 22. Pretty much a year ago now, just over a year ago. Some people probably think that's a hell of a long time. That has absolutely flown to me. But where we got support, no coincidence, we got support on the previous bull market high for the bear market of 2018-19. So found support off this 2018 high. No chop there. But where do I think we are now? And some people think, oh, here we go. Again, trollers in the comments if you want. They'll think, here's a bear. He's putting some lines on a chart. He's trying to make a case that, oh, it's resistance just for no reason. But let me just hear me out on this one. Right. This is why I think we are in resistance at the minute. We can see already, uh, we've come into this zone and been rejected twice. This is the third attempt. Okay. Now, why resistance? Because it was previous support and it's coming in around about between 1.35 trillion and 1.17. Time of recording we're at 1.25. You can see that this was previous support when we had the all-time high. We had the China crash in 21, and then everyone was super bearish there, but it was actually support, and we bounced back up to new all-time highs. And we didn't break through this until Lunar and Celsius happened in 22, and down we went. Now we've come back up. We tapped the line here, first of all, back in August. Then we've got into it 2 times, rejected, and now we're in a third time. So what the point I'm trying to make here is we could get rejected again. Or if you want to be super bullish and have a higher confidence that the bull market's in, because you're not going to miss anything major in my opinion in terms of gains if you just wait a bit longer. Why not wait till you've got some consolidation here above 1.35, get out of this potential resistance zone, and then it looks like the bull market's on. That to me would, from a more risk adverse strategy, that's kind of what I would be considering. Now, none of this is financial advice, but I think I'm just giving you my opinion on this, guys. If you want to be a little bit less risky and just kind of wait in the market, not think you get missing loads, because altcoins haven't really gone anywhere crazy yet, and we'll come on to total 2 to show that now, because it's a different story on altcoins. So I can understand if the Bitcoin maxis out there and you're getting a lot of FOMO. If you just want to get Bitcoin, you don't want to wait any longer, and you just want to DCA in, and if it goes down, you DCA in some more, right? Then that's fine. That's up to you. But I'm just saying, be aware of this. This is my opinion. Why I think we're in resistance. So again, higher probability of bull market for me above 1.35, but we are not there yet. Now, where are we getting these lower targets if we break down that resistance? Well, first of all, we'll go for the double bottom and then again hit that support. It comes in around about 740. But if that breaks, guys, I think things are going to get bad in this market. And again, I've got lower targets now. My original target was kind of the end of this bear market. Personally, where I think things are going to go is going to be somewhere between 5 and 400 million. Got this very low target, worst case scenario, 300 billion. I'm not saying I think we're going to get down there. I'm just saying this is be certainly if we get that altcoin extinction event, if we get Bitcoin below 10K, we are probably going down to around about 300 billion, in my opinion. But that's not kind of where I'm seeing this bear market potentially ending. That's just a worst case scenario. But all eyes on this zone that we're currently in. If we get rejected or if we consolidate above, then the scenario changes. Now, total 2, I think this is more interesting one to look at, because in my opinion, it's less bullish, and again, one to just wait for some more confirmation first if you're not sure what to do in the market at this stage. So if you can see, it's a very different chart. We're in more of a sort of triangular wedge here, where we're setting higher lows and lower highs. Lower highs being the key one for me at the moment. So again, just wait for some confirmation, right? So currently, time recording, we're at 577 billion. Got rejected off this 622. That was only in July, this year. So bearing in mind, Bitcoin's gone up quite a lot since then. That just tells you what's happened to altcoins since then, guys. Think about it. And again, what I would be waiting to do is get above, this get above 622 is your first target. Then you could think, okay, right, we've set a higher high at last, and then once you're above this wedge, and we've got above around this August high of 2022, around 700 billion, and see some sideways action, or a little rejection and a come back and test it at least. Then you could think, right, okay, there's a potential bull market for altcoins here. Now, for anyone who's not aware, by the way, this chart is crypto total market cap, excluding Bitcoin. So this is just altcoins and ETH and everything else, just not Bitcoin, right? So again, I would look to get above 700 billion before I was confirming some kind of a bull market here for alts. Now, also on the chart, this is key for me. I put bulls must hold 500 billion. This is going to be a big warning if this breaks. because if this breaks, we are dropping out of this triangle to the downside, guys. And that is, again, where I think things are going to get really ugly for alts. It's still my expectation until invalidated and we get up here at 700. This is my expectation of what I think is going to happen. And again, if we break down from there, I do think there's going to be a washout in this market. I do think that there's a whole host of altcoins which are going to be in real trouble, and they're either just going to turn into, meme coin prices, or they are literally going to go extinct. The projects are going to pack up. There may be some rug pulls where they just completely pull the last remaining liquidity. So just be aware of this. This is why I say only invest in crypto what you can afford to lose. You best believe anything can happen in crypto. We've seen it already. Okay, moving on. Bitcoin dominance, not a lot of change here, but again, for the guys who are new here, this is my opinion on Bitcoin dominance. I'm still expecting whether Bitcoin price goes up or down, I am expecting this to continue to the upside. This is a very bullish chart, in my opinion. So we could come down and retest 52%, but I think we'll get a bounce there. And I've got these higher targets still of 57 to 60% minimum before I think this bear market is over. Now, I told you my expectation is dominance up with Bitcoin pulling back. If the Wyckoff distribution schematic plays out on Bitcoin and the price starts to drop, I don't think Bitcoin dominance is going to come crashing out. I think altcoins are just going to get a whole load more wrecked, in my opinion. So Bitcoin dominance will continue up whether Bitcoin goes down. That's just my opinion. We shall see if it plays out. But if you've got a different opinion, leave us a comment below. Now, traditional markets, can't take your eyes off traditional markets. Traditional markets have just opened up a few minutes ago, and we've actually opened up a little bit bearish after yesterday's rally. So we are currently red in the pre-markets. We've opened up down now. Okay. Since last update, these traditional markets are charts are playing out beautifully since last updates. So we've set another lower high and we've set another lower low since the last update. I told you 33.6 was a key area. We've broken it. Probably gonna potentially get a retest. We don't have to even get back up here, guys. We may not even get back up here. But lower targets. I'm expecting lower lows. Multi-year bear market. I think ABC correction in the summer. Hold you on X. If you want to follow us on X, it's at Joe's Crypto Chaos. Also, be sure to be following at Crypto Rosetta. Told you guys, I think that the top was in for this year for the multi-year bear market rally, and expect it to drop. The next leg down is going to be epic, and I think we are on this epic run down, and we're going to enjoy it on this channel watching it go. So minimum target 28.7 double bottom, but I don't think that's going to hold. I'm expecting further dive down to 26.2. That's my minimum expectation. But guys, I think these markets are in a lot of trouble economically. Things I'm seeing, I think these could go much lower. So just be aware. Better indicated on the S&P 500, in my opinion. Again, huge warning. I told you about us breaking out here. Some people may think it's a bear trap and we're going to bounce back up, but currently that was a flash warning for me, and we are trending down. Okay, so again, we had the little rally yesterday, but we are down on the day, and we're going to see where we go in these weeks. This is a weekly chart, guys, and we're heading down. Said we're looking for a bounce around 41.3. We did just dip just below it last week, and we've got back above it now. So this could be our bounce if we're going to hold this, but eventually I think we're going to break down. To get bullish again, we've got to get back up here about 45.4, to basically break this descending trend line from the two highs. But essentially, I am looking at us coming down 32.50 minimum target. But guys, I'm going to show you. Some people think I'm probably bear trolling here, but I got much lower targets on the S&P 500. This is just minimum expectation. I will not be shocked if we come down to these levels. So just be aware that these things can happen. Again, on these charts, I say, I think it's best to, completely zoom out on these stock market macro charts, and then you'll realize what an absolute epic rip and where these charts have come from. And if you were looking at them as, crypto coins, you'd be thinking, oh, there's going to be a major pullback there on these high time frames. So don't think that these charts, cannot have a serious crash down over multiple months or years. They certainly can, because we've been going up and up and up for years and years and years. And guess what? All good things come to an end. So moving on, Nasdaq. I think we are in a AI bubble crash. This is the next leg of the multi-year bear market, in my opinion, because we had this AI hype, which provided a stronger rally on the Nasdaq, better gains percentage-wise than say the Dow Jones this year. But I think the hype is dying down on that. Talked about Nvidia a lot. I'll come onto that chart in a moment. But yeah, again, since the last update, lower low on the Nasdaq, broken 14.2. We've got just back above it now. If we break it again, we're coming down to 13.6. But minimum target, the one-to-one coming in around under 10k. I do think we are returning to four figures on the Nasdaq, in my opinion. Get back bullish again on the Nasdaq. We've got to get back above 15.5 really. So let's see how that one plays out again. Key days, key weeks coming up. Okay, gold, really interesting chart. I like looking at this one at the minute. My first expectation, I told you last update or a couple of updates ago, I was looking for a five waves move down from the triple top rejection on gold. That has been invalidated. However, the bearish scenario has not been invalidated on gold yet. So, time recording, we're pretty much bang on $2,000. And it's acting as, a lot of psychological resistance at the moment. Now, what I do think is clear is got an ABC up, that's clear to see, and we've got an ABC down. Now, what I don't know is whether this latest ABC down is a B wave, and we're getting a C wave up now, and we're gonna go to new all-time highs here, break the triple top rejection, which a lot of people may laugh at, thinking, "Oh yeah, double tops." And I understand statistically that triple tops have a less probability of holding, but there's still a chance there. So I'm gonna keep it on there until invalidated, which is fine. And then essentially, yeah, this could be a C wave up. We'll set a new all-time high, and then targets. We'll get this invalidation. The consolidation above 2100 will come, and essentially we'll probably target out anywhere between sort of 23, maybe $2,400 on gold. I don't really see it going higher than that. I've heard I'm seeing all over X some wild predictions of 3,500, $4,000 gold before a significant correction in the next couple of years. Leave us a comment below if you think that's going to play out, but I personally do not see that coming. Even if I'm bullish for a new all-time high in gold, I'm just not that bullish. I just think that is not likely to play out, in my opinion. So in the bullish scenario, we could still come back down to $1,900 here. It still be a higher high, and then bounce back up, because we are hitting resistance now at 2,000. Or if this is an A wave, and now we've just had a B wave up and we're coming down, we should start to reverse pretty instantly, and we should be pretty much heading down to under $1,800, and probably looking at for 1730, maybe around 1650, somewhere in that range. However, as it stands, guys, my main target of 1550, 1440, it's a little less likely at the moment, but I'm not ruling it out. Gold can still break down here, you best believe it. If we don't take out this triple top high, if this remains strong resistance and it holds, I'm not going to suggest we get a quadruple top here. I mean, it's possible. It's not unheard of in charts. It'd be pretty wild, especially on an asset like gold to happen. It's possible, right? Let's see. Let's see if that we get there first. But for the minute, once these highs hold, let's see if we break down on gold. Okay, moving on. DXY. Not a lot to report on this one, but that is bullish in my opinion. Not having a lot to report on the DXY, because I told you would. Time recording 1064. We're up 0.3% on the day at the moment. Nothing wild. But consolidation. We are consolidating above where I said we need to, where the bulls will be in trouble. Once this consolidation breaks to the upside, guys, which I think it will, 1079 should come, and we've got much higher targets of 120, which will take months to play out, in my opinion. Still remain bullish if we can hold 1042, but don't really want to see 1042 breaking. Then we may be in a bearish scenario. But again, look, they called the dollar is dead. They were shouting the dollar was dead all over X in the summer, and look at the rally we've had since. Again, just be careful who you're following. Which accounts have been deleting posts, etc., or which accounts were calling the dollar is dead. They're the same accounts that are telling you Bitcoin is going to 100k at Christmas. Let's see how that one plays out. Okay, moving on. Apple. I like looking at some of the charts in the Magnificent Seven, big stocks. because these are the ones that are, holding up the S&P 500, holding up the Nasdaq at the moment. And I do think once these stocks get into trouble, because I do think there's a good chance the tops are in on these ones, then the whole indexes are coming down, in my opinion. So again, since last update on Apple, set a lower low, and we are still trending down. Looking to retest this again. These ascending trend lines of support are dangerous because how many times can you stay on that ride? You're not going to stay on the ride forever. So should get a retest and a bounce here about 150. But if this breaks, guys, things are going to get ugly, 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 ugly for the markets pretty fast, in my opinion. We should come down to 130. That breaks 120. Be a double bottom on here, but this will be a very bearish structure. And yeah, we should be setting new bear market lows on Apple. And yeah, we'll be looking for potentially sub $100 Apple. Some people think that's crazy. If we get sub $100 Apple, these traditional markets, these indexes are in trouble, guys. Now, another chart that's playing out fantastically, is Tesla. Told you to expect a drop. I literally called the top of this correction perfectly around about 290 bucks. Go back and watch previous videos if you don't believe me. You'll find it. It's there. So I said the ABC was in, and we are going to get a correction on Tesla. But I do think again that was just a rally in a larger downtrend. I am expecting us to first come back down here to around about 165. And then we should, get a bit of a rally from there. You would like to think we don't have to rally. We don't have to rally at all on any of these charts. But I would expect a bounce there. But again, high time frame target, eventually expecting two-figure Tesla. And I think my overall target is going to be between about 65 and 50 bucks. May start even buying 75, 70 bucks. Let's see. We'll wait till see how these charts are playing out further down the line. But we're heading down. We are trending down until really Tesla needs to climb back above 270 to get bullish again. Time recording 197. So things are looking good on Tesla. This chart is playing out beautifully, guys. Now, chart that I'm really proud of. Really proud of this one because this one's just playing out absolutely magnificently to the T at the moment. Okay, I think we have got a great chance of calling the top on the video here. Calling this AI bubble crash that was going to come, that this was super hype, a load of crazy FOMO. Maybe people who left crypto were sick of getting wrecked on crypto, heard about, oh, I can buy stocks now on eToro or whatever, and they thought, oh yeah, let's buy this Nvidia. Everyone's talking about this one. Buying the top at $500, the exact time the CEO sold a whole load of his bag, cashing in $100 million. Bit of a coincidence, guys. Very convenient for him. Okay, told you on X, buying the video at $500 is like crazy, crazy overbought in my opinion. That's like paying $75 for a Big Mac and Coke. That was no joke. Well, it was a joke, but that was me being serious to just try and explain how overbought this stock was in my opinion. So I was looking for this diamond top reversal pattern, and it's just playing out to an absolute T that I actually can't believe. Normally you come to these patterns and you think, oh, I'm going to put these patterns and throw them out to the guys to have a look, and it probably won't work out. But this one is absolutely playing out beautifully. So we had this huge gap to fill. Diamond top reversal coming down. We've broken $400 now. We're setting lower low after lower low coming through, and we should be like coming like an absolute magnet, coming to this 370 range. Where with this gap top, probably going to get a bounce there. Then we're going to break down, retest, break down, and we're coming down to 320. Absolute minimum expectation is we're coming down to 320 on Nvidia, but I don't think that's going to hold, guys. I think we're coming all the way down here to $200. And I don't know if that's going to hold, if I'm honest, but that's where I'm expecting $200. You heard it, $500, 60% crash from Nvidia on the top in this bear market, and the video is going to head into now, in my opinion. $200. You heard it here. Leave us a comment below if you think otherwise. Now, oil. Wanted to cover oil because not many people out there bearish on oil. So again, you might think I'm mad on this one, but I'm still confidently bearish until invalidated on oil because got the free wave correction up again. I could put the ABC on here, but essentially, yeah, I told you we were looking for $93. We got literally a wick above 94, whatever it was. And then, yeah, that's pretty much nailed that target. And we've hit 2 lower highs since. Still looking for a lower low. We're currently 82.30. If once we break 81.80, we should be looking for a lower low on oil and trending down. And I think we're coming back down to retest the $77 minimum. But bear market targets, expecting again this just to be a rally in the multi-year bear market. Same on stocks, same on oil. I think these things are going down, and expecting anywhere between $43 and $57 on oil. A lot of people saying there's going to be an Arab embargo on oil. Expect $150 in the news. Normally, what they say in the news doesn't actually play out. It's the complete opposite. I'm not saying it happens every time. Of course, it can work out sometimes. But we are heading down on oil when the news is telling you to buy. It's going long, so let's see. Now, last of all, wanted to finish on this chart because if anyone's in doubt of what a bull market really looks like, in my opinion, then this is the chart to be looking at. So, not oil, orange juice, guys. Orange juice is going to the absolute moon. This is a real bull market. This is what I'm talking about when I'm saying wait for some confirmation. Okay, ascending wedge breakout to the north on the ascending wedge on multi years here on orange juice, and this thing is absolutely rocketing to new all-time highs now. This is what a bull market really looks like, guys. So if you're wondering if Bitcoin's in a bull market, no, this is what a bull market looks like. So orange juice, super bullish. If only we had bought an orange orchard, we would be laughing right now in this bear market, in my opinion. Thanks for watching. See you again.